Hey guys, it's Nathan Birch here. Just got bored. I'm going for a drive at the moment, or driving back home, should I say. And I thought I'd throw it out there to YouTube or to Facebook to keep me occupied. And I asked a question on my own personal wall. And the question is I am bored and I want to do something while I'm driving on a 5-hour trip back to home. And I threw it out there for people to ask me just something to talk about. And I got some questions, and the questions, some of them were just random things like I should drag race cars in my car or something. I'm not going to do that, guys. I always like safe driving, hence why I've got the camera strapped to the front window. With it, some of the other questions revolved around property market at the moment, what's happening out there, where to invest in, all that sort of stuff. And there's some good questions out there. I'll break it down. There's one question asking me personally what I'm buying at the moment. I haven't been too active out there showing you everything that I've been buying, just because I haven't got the time to go out to the properties myself and all that sort of stuff. Projects that I've been working on this year, I've been doing a few renovations and adding some value to some existing properties that I own in my portfolio. I've been disposing of some assets that, it cause me more admin issues than anything. What I mean by admin issues is just properties that I bought years ago that were good for cash flow, good for a little bit of capital growth and stuff like that, but getting calls from the agents, getting mail that I have to open up, it becomes a lot of just administration things. So I thought I'd trim a bit of the fat off some of my properties and got rid of a couple. They were just mainly sort of regional properties that I own. The properties I've been adding some value to, I've got the Kellyville property in Western Sydney, or the Hills District of Sydney. The market, obviously, as we know, is quite crazy out there. I bought that one going back about a year ago now. The status of it is the property's renovated that was there. I paid $442,000 for that property. It was on a 760 square metre block or something like that. Place is fully renovated, brand new looking thing. Rent on that's $550 per week. It's currently vacant just because there's another dwelling being built on the block, and I've decided to keep it vacant just from a structuring of building the new property. So the numbers on that one there is $442,000. The block of land next door had no house on it, and it sold for $455 or something just recently. My one, I've renovated the house for about $50,000. It looks brand new, like really good reno. I am in the process of getting a new house built on the block. That new house will cost me around $200,000. So I've been to the property for about $700,000. Looking at other sales, other properties currently in the market, I'll be looking at about a resale figure of about $600,000 each. Looking at the numbers of that, would have made myself $500,000 just for buying a block of land and building a house on it. I'll be keeping that, just renting them out. I'll get probably $1,200 a week rent in Sydney with a lot of equity built into it. That's more of a blue chip sort of property. Still about 10% yield. What else have I been buying? I've bought a few motels and shops and different things like that. I'm about to settle in the next couple of months a block of 36 apartments in Western Sydney. Purchase price $1.665 million. That's $40,000 a unit for a brick unit in Western Sydney. Not in housing commission, it's more towards the Blue Mountains. That also has a restaurant attached to it. It is an ex-motel building. It should give me about $200,000 a year passive income. That's after all expenses, and assuming that I've got a 100% mortgage on that property, so it's all right. I'll be buying cash because they're harder properties to finance. However, within saying that, that'll come from equities and different monies like that. So I have to use the opportunity cost of the funds as work it into the cash flow. What else? Got the shop that I showed a little while ago on the Central Coast at the entrance. I've rented that out on a 20-year lease to a big national company, and that rented for 80,000 plus GST plus CPI increase every year. 20-year lease, purchase price of 465,000. What else have I been buying? I bought a few little properties, just sort of deals that I've been buying for my clients via my buyer's agency, property investment agents. Obviously, I'll negotiate things below market value for myself and for other people. The properties that I've been buying are just bulk sort of purchases that I've negotiated for myself and for other people. These things range from some units on the Central Coast that were really cheap, like 120,000 for a 1-bedroom unit, 160,000 for 2-bedroom units. Go find that on the Central Coast. Can't. They're brick units too, by the way, and about 20 years old. What else have I bought? Currently just finalising negotiations on a big bank deal for myself and for other people in Queensland, and that property I've been working on for about 18 months now, and I just had valuations done the other day. They're about 80 to about 120,000 lower than what the bank has valued them at. These valuations have come from Heron Todd White, and those valuations were full valuations conducted only last week. So those properties, they're resort, not resort style, but they're a normal residential tower, but they feel like you're in some resort getting served up pina coladas. They're that nice. They'll have about a 9% yield on them, brand new stock, probably about 200,000 to 300,000 less than what people were paying for them in the past. Yeah, so that's what I've been up to. Been focusing a lot on business. Got a lot of business activity that's been happening from many different angles, which you'll see on further YouTube videos that are done in my office, which I'll talk about different avenues and different products that I've put together, just with things that I've gotten the shits with in the marketplace. You know, you can always improve on things. What else? I've got a couple of questions on Facebook just asking me, Nathan, where is good to buy? I understand the market is moving a lot at the moment, and look, you guys are right. I'm seeing that the market's moving a lot in Western Sydney, in Sydney, in many different areas in New South Wales. I am seeing a lot of areas move that are in Queensland as well. Queensland's been depressed for a long while. It is starting to recover. Do I see a big boom on their hands? Not right this minute. Do I see that happening in Sydney? Yes, I do. I think that the Queensland market, between that southeast Queensland to Brisbane areas, are due to have some sort of price changing shortly within the next 6 months. In New South Wales, everything in Sydney, you're lucky to buy something if you can get your hands onto it. It's hard to find below market value, and I saw an email from someone this morning that came through on my emails when I woke up, and it was asking me about how do I define what below market value is in the current market, and it's pretty rare to, it's pretty hard to define what below market value is when everything's selling so quickly, and what is deemed good value today, next week will be an absolute steal, and what would be normal market price today will be pretty good buying. Personally, I always err with caution, and I want to make sure that there's other properties selling for more money than what I'm paying today. In a quicker marketplace like today, you need to be on top of things. You need to understand what things are selling for in the market, understand what demand is out there in the marketplace, and understand, is it sustainable, and work out whether it is sustainable. Areas that I see for a bit of improvement in New South Wales, I think Sydney's a market, if you can get into at the moment anywhere, whether it be in areas like I've purchased recently, like Vaucluse, whether it be out in Mount Druitt or southwestern Sydney, wherever you can get into. If you're buying things that are below market value, then you're going to make money. I wouldn't be gambling in this sort of market without making sure that all the boxes are ticked. So I do think there's a lot of opportunity out there. My office has picked up dozens of properties this month, in the last month, that are in Western Sydney and even areas as far as the CBD itself. I've just actually, there's a property that I forgot to tell you about. I've got a block of units that I'm buying in CBD Sydney. Those ones there, I'll buy one or two in there, some clients on some of them as well. We do buy properties that are mixed between blue chip inner city stuff that's below market value and stuff that's not as much so. Personally, I feel that opportunities are still out there in this current market. It's a matter of finding those opportunities. It isn't the market that we're working with for the last 5 years here in Sydney. It has changed, and I do think there's still a lot more room for growth on prices. So if you have bought properties in Sydney and you have bought them at, even if you paid market price, you've made money, because a lot of my clients have made millions of dollars just for simply buying properties over the last few years. And that's how real wealth is made. That's how you can make lots of money. Doesn't matter if you're as dumb as me, you can still make money. So it's a good market out there. There is still opportunity there, as I said. The coastal areas, Central Coast, Newcastle, Wollongong, all that sort of stuff, those areas are starting to get washed out and are treated like Sydney, because things are moving in those pockets as well. I do see a strong sense that regional areas will pick up in time, and I think this is not the normal cycle. People talk about inner city properties go up first, and then outside of that the ring goes outwards. I personally don't think that there's a ring in Sydney. If anything, the boom that we're seeing at the moment started in the western suburbs and southwestern suburbs, and they've gone in towards the city this time. But I do see, like obviously Sydney, the outer suburbs and the other rings around Sydney, they are quite active. But I do think that it will infiltrate into areas such as like your regional areas, your major regionals, whether it be Orange, Tamworth, Dubbo, Albury, Wodonga, those sort of areas. Like, I don't know, I don't have a crystal ball for that stuff, but what I do believe is, as prices become unattractive to buy in Sydney and those sort of areas, people will go more towards regional properties just so they can get a better yield and a better return on their investment. I do think that there is a lot of opportunity in Queensland still. That opportunity, I believe, will be limited. I reckon there's probably 6 months to 12 months before we see the market pick up to where it should be in price range. However, while it's there for the taking, someone should be doing something about it and buying properties. So if property deals stack up and the numbers stack up and you're comfortable with buying based on those numbers, then make the deal happen. If you need any help or any guidance or anything like that, you can contact the office. I don't call my office that often, so I'm taking a stab at the dark on my office number. It's 1300 367 925. Speak to one of the girls when they answer the phone, have a chat. Yeah, even if you're going to come in for a map session, whatever. But yeah, with it, the market is moving out there. I will keep doing regular sort of updates, talking about different things that I'm seeing out there. One thing that I've been asked a bit about lately is interest rates. What do I see happening with interest rates? Personally, I think interest rates are very low, and I think everyone has to agree to the fact of that. do think we're almost at the bottom from interest rates. If we do see any reduction, it would only be about 0.25%. However, our old mate Glenn Stevens from the Reserve Bank of Australia, he is probably seeing through the stats that property prices are going up, and that will probably, you know, if he brings it down further, it'll just be chaos from that end as well to curb inflation. I personally think it would be a time now where it'll stay stagnant. It will either start going up in 6 months, or it may come down 0.25%. Unfortunately, I'm not a fly, and I don't sit with all of the Reserve Bank meetings, so I don't know exactly what's going on in there. But what I do think personally, if it was my shot, I'd think the interest rates may stay stagnant. They may come down a little bit by 0.25%, but that would be the least, the most it'll come down. With the upside of it going up a couple of points over the next 12 months to 18 months. I don't think it's anything anyone should be aware of or be scared of. And I do think that, you know, when interest rates do go up, and it is fact that when interest rates do go up, people always get scared that prices will come down. But what I often find, and what always happens, is that property prices, as interest rates start going up, that's where the blow off top, where all the suckers come in and pay over the top prices. So if you think that the property market's going to fall, I don't know. I certainly think the pricing that we've seen increase over the last 6 months in Sydney itself is long overdue, and I don't think we'll see any of that fall off the price when interest rates do go up and when the market does change a bit. I think yields are pretty low at the moment in Sydney. You can still get 7%, 8% if you're lucky. However, in the future, I would expect to see that rents would go up. I know definitely through all my staff throughout the Blink property group of companies, the property managers have all been telling me about how the market has changed this year. I've been speaking with other property managers within the industry, and the market from a rental side of things, it's definitely not a time where the market is booming, a rental boom. It's more of a sales boom. A lot of tenants are buying properties and all that sort of stuff. But I am very excited about what will come in the future, whether it's 12 months, 24 months, 36 months. I would expect to see a rental correction where rents will rise quite nicely, and I think that is probably 24 months away to 36 months away where we will see rents rise nicely. So at the moment, I wouldn't be expecting too much from the rents. They're just ticking along, doing their thing. But prices, definitely, you bought properties in the last, whatever years before now, you've made some good money, and congratulations. And I'm just trying to think else what was on Facebook. There's nothing there at the moment that I can be aware of, that I can remember, that people ask me to talk about. But I appreciate you keeping me entertained, and if you've got any other questions, maybe next time I'm driving I can talk about something else on YouTube, whatever it may be. Also, remember, if you've got any questions, put them in the comment box below on YouTube or Facebook. And if you want to watch more videos and more stuff that I have to say, click on the buttons up the top. Don't know which side it is. Click up top and subscribe to the channel, and we'll catch up soon. Have a great day. Bye for now.